Hey folks, welcome to the Replace University podcast. As always, I'm your host, Michael Lush, and today I got a special guest. Her name is Ande, not to be confused with Ande Frazier, author of this book, Financially Free, 11 Conversations to Have with Yourself About Life and Money. And Ande, if you don't mind, I'd like to read a bio so the audience can kind of get familiar with who you are first, and then we'll kind of dive in. So Ande Frazier is a financial expert, speaker, and author with extensive experience in the financial services industry. She is particularly known for her focus on empowering women to achieve financial independence and success. Frazier has held various leadership roles throughout her career and is often sought after for her insights on financial planning, particularly for women. She has over 25 years of experience in the financial services and working with clients, financial advisors, and institutions. She's the author of, again, this book, Financially Free, 11 Conversations to Have with Yourself About Life, Money, and Worth. It provides guidance on understanding the emotional and psychological aspects of money, particularly aimed at helping women take control of their lives. She's held executive positions in various financial organizations and been instrumental in developing strategies to support financial advisors and their clients. She's a recognized speaker at conferences and events where she shares her expertise on financial literacy, planning, and personal finance, especially as it pertains to women. She has been featured in several media outlets, providing her insights on financial planning and unique challenges women face in achieving financial security. She's dedicated to changing the conversation around money, particularly for women, and focuses on the intersection of finance and personal development. So welcome to the show.
Well, thanks.
Ande Frazier. I take it that you have this passion for helping women.
I do. I feel like that there's so many women out there that are really looking for somebody that will give it to them straight.
Yeah.
Will have their best interest in mind and be able to answer their questions without either assuming they already know things or assuming they don't know anything.
Yeah, it's kind of, I used to be in the mortgage industry, and, we'd have these huge sales floors, and we always, I wouldn't say complained, but we would talk about how just women did a better job. And I'm not trying to, placate you or anything, but how women would typically be at the top, not all, but some would be at the top. And one thing that was, that we kind of found was that when men were talking to men, there was a competition. And sometimes when men would have a female client, it was almost like they were talking down and being very condescending. However, when men would or women would talk to male clients, it was almost like the male client, one, wanted to listen more and was more open-minded, but also wanted to compete for the attention, if you will, right?
Yeah.
Just through natural instincts. However, and not really contrary, but when women would talk to female clients, then there was this more, okay, I don't feel I'm being condescended to. I'm not being talked down to. There isn't this competition thing at stake here.
Right.
So anyways, it was just easier for them to have conversations and find out what the pain points were for the client. So interesting that you should put that up, because I've definitely experienced that in my own life.
Yeah.
So we'll get into this. Obviously, what we're going to talk about is a myriad of topics. Obviously, you're big into budgeting, financial planning. So let's start with the basics first. And then we'll kind of get into what I'm most passionate about, which is infinite banking concepts. So can you kind of share your journey into the world of business?
Oh, goodness. Well, I got into the business right out of college. My father is in the business, and I wanted to be in the fashion business. So this is a far cry from what I wanted to do. But he talked with me about how I could build a career that would allow me to also do the other things that I wanted to do, like build a family and be able to have flexibility and control. And he focused a lot on the fact that our industry required building relationships and meeting people and really being able to relate to people more so than a bunch of numbers and spreadsheets. So he brought me into the business. I was an advisor right out of college at 23, did that for several years, and found that I also had a knack for teaching other advisors about all things related to our business, whether it be, how to run numbers and produce an illustration of some sort, or to talk to clients, or to develop a marketing plan, kind of all things that are related to their practice. So I started training and developing other advisors pretty early in my career. And I've been really fortunate to have done a lot of things. So without kind of going through every little thing, I had worked in the practice development area of the industry, helping advisors and financial firms be able to grow and develop. I've also ran a fintech company, a financial technology company that had built software for advisors. I launched a media company focused on women and money. And then in 2020, when COVID hit, my dad and I started talking. And at the time I was in New York and he was in Georgia. And he said, I'd like to kind of slow down a bit. I'm, my early 70s at that time. And I said, I'm kind of itching to get back into working directly with clients, because in my role there running that media company, I wasn't able to work directly with clients. So I came back and joined his practice and taking that over, and moved back to Georgia. And so it was years of back and forth and then moving, but I have my own practice here. I also have a consulting practice where I work with business owners. And then I do a lot of speaking and writing, especially about women and money.
So you mentioned that this was your first gig right after college.
Yeah.
Paraphrasing. How did that come to be? Was it something that you always, obviously you mentioned that your father was in the field, so I would assume that had some influence, but was it just something that was, you knew that you were going to do, and that's kind of what you focused on in college, and then after college you just knew that that's what, or was it some kind of happenstance?
Well, like, I wanted to be in the fashion business, so this was not on my radar at all. Yeah. Having said that, I didn't have an affinity for that, but I was good in school. I graduated magna cum laude. I was smart, right? And so when he started talking to me about how to build the business the way that I wanted, I thought, why not? Let me give it a try. Because at that point in time, I was finishing up my my college career at Old Dominion University in Norfolk, Virginia. And I knew I wasn't, at that point, I had no thought of moving to New York City to work there. And so the more I started to understand the fashion business and what jobs there really were, the more I was like, ooh, I don't know if I want to work in retail for the rest of my life. So he just kind of hit me at the right time. And I thought, I'm young, let me try it and see what happens. And I remember when I first took my insurance exam and I got done, and he said, well, don't worry, you can always take it again. And I said, what makes you think I didn't pass? Like, I passed. What are you talking about? And so I think that, in some ways he wasn't necessarily expecting maybe for me to, have adapted so quickly, but it just kind of clicked with me. And the planning process that he was using at that point in time had a lot of visual elements and made sense to me. And I think that's what really got me so hooked into wanting to do this for a career.
Yeah. So you and I couldn't be polar opposites. I was far from my magna cum laude in college. I did just enough to qualify to be eligible to play basketball. And then my insurance test, I studied the night before, and I was like, you know what? It'll be good practice. I'll just take the test because it'll be good practice. And I was shocked that I actually passed. So you and I could not be polar opposite. You've obviously had a very extensive career and a successful career. Could you kind of pinpoint like any very specific pivotal moments that kind of changed the trajectory of that, or just were massively transforming for you?
Yeah, I think, first when I was working as an advisor and then I started teaching other advisors, I think that a lot of people say that in our industry, those that teach are those that can't sell. And I always thought that was a bunch of bunk. I mean, it's like saying that if you never played football, you can't coach. I think if you understand the mechanics and what you're trying to do, you can teach and train. And I've been very successful on the sales side too. So it's, in working with clients. So I just felt like that there was a real need to have really good development and teaching and training of advisors, because we're interacting with the public and they need to trust us, and we need to be focused on making sure that we put our best foot forward so that consumers will continue to come to us for advice. The value that we add is tremendous. And even though technology's evolved and we have AI and all these things, there's nothing that can take the place of having somebody listen and understand. And, there's an emotional aspect to managing people's financial world for them. And I don't think that's going to go away, even with the evolution of AI. So I think teaching advisors how to be mindful of that has really been a pivotal moment. I also think that running a company gave me a totally different perspective than just working as an advisor has. So I got to think about what is it like to sit in the seat of a business owner.
Mm.
And so the first company that I was running was, an established company, had been around for 20 something years by the time I came in, maybe even close to 30 at that point. And it was purchased from a family. So there was a history there that I was familiar with. And so I was able to kind of pick that up and do some things that hopefully made it better, right? And then launching a company was a totally another pivotal moment where, I had to vision what we wanted to create it. I decided to go outside of our industry for inspiration and thought leadership so that I could bring some of those things back in. And so that was, again, I think really helpful. And so now when I look at where I'm at now, where I spend a lot of time working with individuals and families, but I spend a lot of time working with business owners, I can relate to them differently because I've sat in those shoes where I've run a business.
Yeah.
I'm able to talk with them about business strategy. So I think that all of those things have made me better for where I am today, for sure.
It kind of dovetails perfectly in my next question, which was, what do you believe are the most critical skills for entrepreneurs today, especially in this rapidly changing business environment?
Well, I will tell you, the first thing is that I think that how you do anything is how you do everything. And if you've got an area of your life that is not going so well, I would say that you're out of integrity in that area, whatever that is, then it's going to be hard for you to execute on a business strategy. So I think that you need to keep that in mind. And so when you start cleaning up those areas of your life, things will start to fall into place. It's kind of like a rippling effect, that happens. If one area is not working well, it'll ripple over into the others. The second thing is I think you have to go slow to go fast. And I think a lot of business owners have great ideas that they think can be translated into a business, when in reality, it may just be a good idea.
Yes.
So running a business, launching a business, being successful in that area just, takes more than a good idea. It takes strategy, and you need to take time to figure out what your competition is, figure out your marketing plan, really, develop the numbers, do some pro formas, create your vision, your brand, all of that, as you're also launching. You can do it simultaneously. I think there's so many entrepreneurs that are building the plane as they're flying it, which is great. But I think without a good strategy, a good idea won't get you very far. And I think a lot of business owners have built themselves a job. They haven't built themselves a business. And so for me, sometimes going slow means that you can focus on, hey, this isn't working. I need to pivot quickly and change. I need to drop it. I need to, listening to your consumers and taking the time to do that, I think is really critical to long-term success.
It's a good point, because sometimes growing too fast is worse than not growing at all.
Yeah. And sometimes growth cannot be the way to go. I mean, if you're growing, but you can't keep up with retention, you can't keep up with the demand, you're having to hire a bunch of new people, how are you training them? Like, everything can fall apart. And growth, a lot of people think I need to grow and make more money, where sometimes it needs to be, looking at doing things more efficiently. It costs less to keep a client than it does to get a new one. And so growth doesn't always mean it's a good thing. It's got to be measured in regard to everything else you're doing.
What do you feel are some common misconceptions about running a successful business?
Well, I see a lot of business owners that have employees. They have great revenue, but their profits are just not. I mean, you're wondering, what are they doing? I mean, they're managing all these people, and they're handling all of the stress of running a business, and their profit, they could probably make more just going and getting a job somewhere. And so I see that a lot. I see a lot of business owners get in over their skis way too early, where they haven't done some of the basic things like risk mitigation. Like, what happens if something happens to them? What happens if, they're no longer able to work? What happens if they get a divorce? What happens if they become disabled? So there's not great risk mitigation, not really great drafted operating agreements. And so, thinking about their employees, and they're the business. And so if something happens to them, the business falls apart. So there's a lot of different areas that I think that business owners have to be thinking about. And so they can get ahead of themselves really quickly, and then they don't have time or help, and they don't know where to go to find help to get them back on track.
Yeah, I've seen it not only personally in our business, but other associates too in their businesses, where they grow so fast that they are inflating the overhead as well. to kind of keep up with demand and the support levels, the back end service, the fulfillments and whatnot. And when they stop growing, they're still left with that inflated budget. And then they're left either having to raise capital or lay people off to get lean. So we definitely have that in the years past. How do you see technology? You mentioned AI before, and me and Derek, who's in my office right now, we utilize AI quite a bit. How do you see that transforming the way that businesses operate in, let's say, the next 5 years?
It's what's interesting is I had 2 interns this summer, and neither one of them was really familiar with using AI. They weren't using it in their classes. And I thought that was very unusual. I mean, they kind of like one of them knew about Chat GPT, but they really weren't necessarily using it a lot. And I thought that was unusual because I would be thinking that in college, that would be something that they would be incorporating, especially on the business side.
Right.
Maybe not in your sciences or your arts so much, but on the business side for sure. And I was kind of surprised that I have 2 children. One's out of, already graduated college, and the other one's still in college, and he's not using AI that much either. Now he's a science major, but still, like, I'm just kind of surprised at that. So I think that some businesses are really using it heavily to supplement their business, and others maybe not so much. But I wonder how much it's really going to be integrated if there's not a focus on it in our higher educational institutions. I can tell you that for me, I use it for brainstorming. I use it for helping me, like when I'm having a creative moment, I might flesh something out and use AI to kind of help spark some things or to get me started on something. But, there's some AI that I've gotten back that I'm like, this is not correct. So you have to be careful about that. Yeah. But I'm just using it more as inspiration, giving me ideas, summaries. If I'm on a webinar, I might have it record the webinar and give me a summary. So I'm using it more in my personal note taking there. But I think a lot of businesses can use it for marketing. They can use it to streamline their creative. Maybe it's branding expertise. And those are the immediate, easy things that I think people can do.
Right. What advice would you give somebody that's just starting out with their first business in today's economic climate?
I think that definitely have a great business plan before you launch. Mm-hmm. Make sure that you can communicate what it is you do in, a couple of sentences. Mm-hmm. I have somebody that I know very, very well who's got a business, and they've been struggling with really to get followers and to get people to kind of, purchase from them and do things with their business. But when you ask them what their business is, like, what are you really doing? They can't articulate that in a quick and easy way. Yeah. And I think that's something that is important. So if you're launching a business, you got to be able to tell people, what do you do? What's your mission? What is it that you do really quickly and easily? And I think that taking some time to maybe build a brand and to really focus on that is really important. And to not try to do too many things at one time. Focus on one thing, do it in a niche, get proof of concept, and then you can iterate from there.
Mm-hmm. Do you think passion plays a big part of that? Because from my own personal experience, I just happen to fall into something that has big demand. If it solves a big problem, and the bigger problems you solve, the more you're rewarded for. But in the early days, there's lots of challenges, and because I was passionate about it, I really viewed those challenges and the early failures as feedback. And had I not been passionate about it, I could easily see myself giving up on it and just being like, you know what, now I'm going to move on to something else. So do you feel like passion plays a big part in a business owner being successful?
I do, but I think that too much can maybe be clouding their vision in terms of what really needs to happen. Like if you're so passionate about your business that you can't hear good feedback, that you're not willing to iterate and change and pivot when something's not working, then that can be a negative. So I think that you want to have that passion. It keeps you motivated, keeps you strong, keeps you going. But if you're letting it blind you to where you can't hear what you need to hear to build a business, then I think that can be a negative thing. And so I think too much can maybe be a problem. Too much of anything is a problem, right? So same goes for passion.
Yeah, I didn't think about it from that perspective. All right, so now I kind of want to transition into my favorite topic, and it's infinite banking concepts. Now, I will, first I want to tell you the story because it was just yesterday or 2 days ago. I was on YouTube, And I was looking for some content to send Laura for something else, and I stumbled on a Dave Ramsey video, and it's a little bit misleading because the title says "Infinite Banker Calls In." This person was not an infinite banker. This person was a person that consumed a whole life insurance policy. To call that person an infinite banker, now this person was somewhat educated. They're consuming it, which I think if you're going to consume a product, you need to understand it and how it works and how you're going to execute on it. So he was knowledgeable, but he was not a licensed producer or an IBC practitioner by any stretch of imagination. And I was telling Derek earlier that it'd be equivalent to anyone that's consumed a mortgage calling them a loan officer. Just because you consumed a mortgage doesn't mean you can tell other people how they're going to consume a similar mortgage or even one that's vastly different with all the different products that are out there. But long story short, obviously he's very much against whole life insurance policies, at least publicly, right? And we'll just kind of leave that there. But there was a couple comments, and when I say a couple, at least 4 times he said, banks don't own whole life insurance. He said they never do, because this gentleman was like, banks are pretty smart people. I mean, they have the tallest buildings in every city that you go to. They make a lot of money. They consume these products. And he goes, no, they don't. They never do. And so back to our earlier conversation talking about AI, ChatGPT, and I already knew this because, years ago I was researching in the FDIC website looking at balance sheets for banks and realized that banks were owning life insurance. But they changed their website. Sometimes it's harder to find balance sheets for banks. So I instead of fumbling around with it, I just asked ChatGPT, how much does Bank of America own? How much does PNC? How much does US Bank? How much does Wells Fargo? How much does Chase, et cetera? They own billions and billions of what's called bank-owned life insurance. Why do you feel like he's so against it to the point where he will ignore public information that anybody can research?
Well, who knows if he did research it? I think that there's a couple of issues there. First of all, he's marketing himself. Yeah. And I don't know that I would venture to say he doesn't understand the product. Maybe he hasn't taken the time to really understand it. And maybe he felt like the platform to stand on is to be against it versus looking at it to get, to make a name for himself. I don't know. I have no idea what his background is or his knowledge is on permanent life insurance. I know he's talked about it for years and years and years, but I will tell you that there's a lot of people that have benefited from his debt conversations around money. But when it comes to thinking about people of means really taking those concepts that he shares and going forward with them, he's not talking to the people that are making 6 figures. He's talking to the people that maybe combined family income 60, 70,000 a year. Right. And he's got to be general in somewhat of his conversations. One of the things that I'm not a fan of that Dave does is shaming people, to tell people they can't go out to eat unless they have $1 million in their bank account. I mean, come on, you know what I mean? So I think that people don't like to feel shamed around their money. And I can tell you women don't like it.
Right.
And so I'm finally starting to see people kind of, bristle a little bit at that conversation, is because people want to feel like I can save for the future. I can do the right things for my family, and I can enjoy today and be able to spend some money on some things along the way. And can I have both? And that's really kind of the goal there. But yeah, banks have owned life insurance for a long time, permanent life insurance. So a lot of businesses own permanent life insurance as well on their employees. So key man, deferred compensation. So I don't know if he just didn't take the time to do the good research, or if he thought nobody was going to fact check him. But
yeah, it's easy to do. So anybody that's watching this, whether it's Google or FDIC stands for the Federal Deposit of Insurance Corporation companies. That I should know it. I own a joint venture.
I should know that.
What the FDIC is. But you can go to their website. Obviously, the easiest thing to do is just to put it in ChatGPT and say, hey, do banks own life insurance? And it's called BOLI, bank owned life insurance. And then you can dig even deeper. You could specifically say, how much does this bank own? How much does this bank own? And BOLI is almost identical to whole life mutually owned insurance. The difference is the bank will own it on key people in the bank to mitigate risk.
Yeah.
And it's not necessarily mandated by the FDIC or the OCC or the Fed, but it is highly recommended so that banks mitigate those risks because, banks are into very traditional investments. When they take on deposits, they have to make sure that they ensure that they don't lose that money because they're bound to that. That's essentially a contract between them and their depositors to have it readily available to them, at least 10%. So they get into bonds, treasuries, things that are very, very low risk, but also low yield. And, if you just research this, BOLI is, some of these banks actually have more in BOLI than they do in real estate holdings because of the tax efficiency of it and also because of the higher yields that it would get versus the bonds. So we kind of moved too far ahead. Let's back up a little bit. Can you kind of give us, in your words, explain the basic principles of infinite banking concepts?
So I went and was introduced to the infinite banking concept back in the 90s. It's been that long ago, right? Pretty early on in my career. And what I know about infinite banking is that, first of all, I think that not everybody is a fit for that. I think you have to understand behavior around money and you have to understand what you're doing to be successful in that area. But it's where you're using permanent life insurance as essentially your own bank, where as you're building up cash value, you're using cash value to help fund the things that you would ordinarily consume, like a car, for example. So you might borrow money from your cash value to buy a car. You then pay back the loan as if you were paying back a bank loan or a car loan from your dealer, and with the same rate, just like you would be if you borrowed money from somebody else. And if you do that, then the money gets replenished back into the policy sometimes faster than it would have otherwise. And then you have it to use again and again. And not only that, but as you've taken that money out and have used it, then depending on the company and the policy and the design and all of that, you will still be earning dividends on that collateralized portion of money, even though you're using it for something else. And so, it's not like you're just taking it out and it's just gone. It's still doing something internally in your policy.
Right. So you made a couple key points there. So when you use the cash value to, let's say, purchase something, and by the way, it doesn't have to be purchasing a liability. And not all cars are liabilities that I've recently learned. I've got an associate by the name of PJ that buys exotic cars and actually makes money buying exotic cars. They hold their value more than, let's say, a Camry does or what have you. But, I'm generalizing here when I say, utilizing it to buy liabilities. You could also utilize it to buy assets, whether it's real estate, whether it's investing in a business or, what have you. So there's a lot of ways to kind of compound the effects of it. Can you also touch on the tax efficiency of it? Because I think this is something else that, right now, and again, we're talking about different audiences, I brought up the name Dave Ramsey just because that was a video. And I took Financial Peace University and I actually taught it in my church 14 or 15 years ago because at the time I needed it. I did well in the mortgage industry. That went belly up. So did I. Went flat broke. And I was like, I got to get back to the basics. And it was good for that piece of it, making sure I kept my burn rate low. I managed my expenses and understood, how much I had to be able to invest. And there was several years where I didn't have anything to invest. I'm like, look, I'm just trying to stay afloat here and keep the lights on. But a lot of the average day Americans are really big into 401ks. And I'm not dismissing all 401ks. If you're with an employer that has a match, I think that's great. Would you recommend people putting more than the match into their 401k versus something like this?
I think that one of the things that I like to talk to people about is having diversification, not just internally in your investments, but in terms of tax diversification.
Yep.
And, so I have a lot of people that are in retirement that are taking money from their 401ks and now their IRAs that, the taxes is always the complaint.
Yeah.
Especially when they get into the time of their life where they're required to take those minimum distributions out. Some of them don't need them. Like they're always seem like, man, my taxes. And all that goes on the front of your tax return. It affects their Medicare premiums. It affects the taxation of their Social Security benefits. And so, all that deferred growth, now all of it has got to be taxable. And let's not forget, a few years ago, when they changed the rules around inherited IRAs, now adult children are inheriting their parents' IRAs and having to take all that money out within 10 years. Now that can be a huge amount that's going on top of their current income. So the taxes are getting, for a lot of people, they're getting to be of concern. And so when I think about somebody that is contributing, getting the maximum match, anything over and above that, I think about what's the highest and best use of that money. Maybe we should be investing it somewhere else where you can get capital gains treatment. Well, yeah, you may be paying tax each and every year, but getting to experience a different tax rate, getting to experience some of that, taking losses against gains, having the flexibility, no IRS guidelines around that money may be a better scenario. Maybe taking that money and fortifying their protection elements, doing things like life insurance, making sure that they've got disability coverage, liability coverage, all of that. That could be the highest and best use of their money, or it could be buying real estate, investing in a business, especially if they're getting a good rate of return in a business. So I think it varies from depending on each person's individual situation. But I definitely think that having some diversification on the tax front is as wise as having diversification within the types of assets you're buying.
Yeah, that's wise. I was watching a video where Grant Cardone was being interviewed. I think it was Vlad, which, Vlad does well, personal income, millionaire, multiple millions. But even he didn't know that a 401k was tax deferred, not tax free. So he's like, my 401k is awesome. And, Grant hit him back with that. He's like, I'm sorry for you. He's like, why would you be sorry for me? My 401k's done really well and it's grown and I've got millions of dollars in there. He's like, because you're going to get taxed on that. And I don't think people realize that at some point you're going to get taxed on those dollars. And so, you've heard it said a lot that you kind of really sit in one of two camps. Do you feel like tax rates are going to go up or do you feel like tax rates are going to go down? Well, if you feel like tax rates are going to go up, given the national deficit and some of the propaganda that we're seeing, we're in an election year. So, there are two different camps there. One's definitely pro-tax and one's maybe not so much about pro-tax. So, I think there's a very good chance that tax rates are going to go up, whether it's in this election or in the future, just to tackle the national deficit. So why would I put right now, we had a tax law implemented in 2018 where tax rates went down. Why would I put money into something that's tax deferred, thinking and with a high probability that taxes are going to go up so that when I need that money the most, now I'm going to get taxed on it versus let me go ahead and pay taxes on the dollars now to lower tax bracket and then put it into something where I don't get taxed again. Why do you think that some people are having such a tough time grappling with that? Or is there a better alternative to what we're talking about?
I've seen a lot of people kind of now switch over to maybe I should be doing a Roth 401k, Roth IRA. Like a lot of people are talking about that now way more than they were a few years ago when it was all around maxing out your 401k. I think that people get caught up in the match and they like the fact that their employer's doing something for them. I think a lot of it has to do with discipline. Like it's like, in some ways it's out of sight, out of mind. They can set it up and they can go. And they know that it's going to be there for them. So I don't know that they're giving a lot of thought to what's going to happen when they have to take it out until they get there. And then they're like, wait, what? Now I've got to do this and what the impact for that is. So that's certainly something that I try to educate people on. And so I think it is discipline. I think it's the match. And I think it's because so many people for years and years and years said, this is what you need to do. Mm-hmm. Everybody's just blindly followed them without necessarily thinking about, is this the right thing for me to do?
Right.
And I don't think it's a bad thing. I think that, too much of anything is not a good thing, right? Too much dessert is not a good thing. So, for me, it's about, yes, do that, get the match, but let's do some other things too, so that you can be more diversified from tax perspective, investment perspective, ownership perspective, be out from underneath the IRS guidelines perspective. I mean, the government can change the rules at any time. They did it a few years ago. They could do it again. So I think it's about education that is required for people to really understand how this is going to affect them in their situation.
So one of the things I took from that is we're very much herd mentality. If our neighbor does it, our brother does it, our sister does it, our grandparents did it, then that's just what you do. And there's some crossover for what my sphere of influence is because I was a mortgage lender for 17 years and didn't know there was an alternative. It's like mortgage is the only way to go. Now, inside of a mortgage, could you do some things to speed it up, pay extra, get a shorter term? Yeah, absolutely. But nobody until 2009, I had a hedge fund manager really explained to me that actually there's alternatives to a mortgage. And people don't realize that a mortgage is a modern day debt tool. Emphasis on modern. Now, the word mortgage has been around for thousands of years. Mortgage, Old French for death pledge. But people don't realize that the mortgage that we consume today as average day Americans has only been around for 96 years. It didn't always look this way. You go back prior to 2013, a mortgage was a two-way street. Money could flow in and out freely. If you're a farmer and you got a $200,000 farm and you owe $100,000 on it, and you're like, I need some farm equipment. Go down to the bank and say, hey, you hold the deed to my farm. It's valued at 200, I owe 100. I need 10 grand. Cool. Yeah, it's pretty good collateral position. We'll give you 10 grand. Go cultivate your crop. You make 20 grand. Guess where they put it? They put it in their mortgage. Fast forward to today, banks get involved with fractional reserve lending and like, hey, we got a really cool magic trick here. We can make a mortgage a closed-end product. Then it forces people to segregate their income. It separates them from their cash because we need deposits. We need deposits back, especially after the Great Depression, right? So they made a mortgage. They made one simple change. Let's make it a closed-end product and not an open-end product. And it's ironic to me that people, it's the herd mentality. They've never heard of it before. This is what my neighbors do, so that's just what I'm doing. And they don't take the time to realize that they could be consuming. This isn't for everybody. You're talking about infinite banking concepts. I'm talking about alternatives to mortgage, whether via lines of credits, whatever. It is definitely not for everybody. In fact, it's only for the few. And what I mean by that is, unfortunately, and COVID taught us a lot. What was it that Warren Buffett said? You can tell who's skinny dipping when the tide goes away.
The first time I heard that line from Warren Buffett, my dad said it we were doing a joint session on a conference, and he said when the tide goes out, you find out who's swimming naked.
Yeah,
and there's nothing better than hearing that statement from a Southerner. But it's so true. You talk about herd mentality. I think that in addition to that, it's confirmation bias. Once people hear something, then they seek out information to support their beliefs, and they will discount any information that contradicts their beliefs. I mean, we're seeing that run amok in the political environment. People have dug into their lanes. There's everything they pull that they use to combat the other side is all based on supporting their theory. They're discounting the others and double downing on what they believe. And so I think that we've been, herd mentality coupled with confirmation bias keeps people from thinking for themselves and maybe doing their own research. And so I really hope that people will start to be more open-minded and be willing to listen to different viewpoints and take those things under consideration. And even our industry has to continue to make sure that we're giving advice based on each individual person's situation or business owner's situation. Because, there's a lot of financial entertainers out there, influencers out there, Dave Ramsey being one of the older, been around for a while, one of the OGs, I guess, in that lane, but we got some new people out there doing that now. And, so we have to be careful to recognize that just because what they say may apply to some people, it may not apply to everybody.
Right.
And we have to get better, I think, as a consumer base in terms of vetting out and being willing to listen and question and not be so dug into our beliefs that we're not open-minded for this other opportunity.
I actually heard this, I want to say yesterday, maybe the day before as well. But, you got three people that are far more famous than you and I. Susie Orman, Dave Ramsey, Robert Kiyosaki, right? Not that they belong where they are. And I'm sure when in Robert Kiyosaki's field, there's probably somebody more famous than him. But to me, that's what comes to mind is Susie Orman, Dave Ramsey, and Robert Kiyosaki. None of them are wrong. It's just the way I heard it said was Susie is for the poor, Dave is for the middle class, and Robert Kiyosaki is for the rich. Would you agree with that?
I don't know. I mean, I think having $1,000 in your emergency fund seems a little low for most people. I mean, I don't know how $1,000 pays for anything emergency wise. No. And that's certainly something that I know that Dave recommends. So that's why I think that, when he's talking, he may be talking to that combined family income that's under six figures, because anybody that I know that has an emergency, I mean, heck, if your AC blows, you're going to be paying that much to get it fixed, much less, something goes wrong with your vehicle or your health or anything like that. So I don't know. I think that there's, all those three have been around for quite some time. I mean, I got into the business in 1993, and I remember us all talking about, Dave and Susie and Richard back then. And so now we've got a whole new slew of influencers out there. And we have to remember, and consumers need to remember, that anybody can get on and say whatever they want. That doesn't mean that they can be held accountable for anything that they say.
Correct.
When I think about taking advice from somebody, I want to take advice from somebody who's licensed, who's done education, who has credentials, that's got experience actually doing this for other people versus somebody that decided I'm going to launch a TikTok channel and make money's the topic of the day.
Mm-hmm. Yeah, that is so true. So true. Now, do you put a lot, I'm licensed as well, but do you put a lot of emphasis on being licensed? Because, like I mentioned to you earlier, I got licensed in insurance. I don't use it. I don't design any policies. My team does that, but I did it for business purposes and also for the credentials, just so when I'm talking about it, people are like, what are you talking about? You're not even licensed. I am. But I just feel like going through the process of getting licensed didn't teach me anything.
I think a lot of
Especially when we're getting the specifics like infinite banking concepts. There's nothing. And in fact, I remember the instructor as I'm going through this course, I'm kind of bringing up those topics because I'm looking for affirmation as well, but I'm also just trying to clarify, like, are you sure about he didn't have a clue. He had been doing this since Reagan was president, not infinite banking, but just insurance. And he had no idea that it even existed. And some of the things I would bring up in class, he's like, you know what? I think you're right. And I'm like, how have you not heard this? You've been around since Reagan was a president doing this, but you didn't even know that this was a sector in the market. So I feel like being licensed is only your foot in the door. I want to work with people that are specialized in that field. Like for instance, if I'm a veteran and I want to get a mortgage, I want to work with a lender that does VA loans only or primarily, right? Or any other industry, there's a lot of crossover there. I want to work with specialists. Like for instance, taxation. As I've kind of moved up the ranks in my professional career, I used to just H&R Block, Jackson Hewitt, or the CPA down the street. As things got a lot more complex, I realized I need a specialist. I need a strategist, not just a general CPA or H&R Block or TurboTax. It's far more complicated than that. And I don't want to play in the gray area and make a mistake just because somebody's licensed to push a keyboard. So how much weight do you really put on having a license?
I think, if you're wanting to do this as a career where you're actually, whether it be selling insurance products or, helping people with their investments or real estate, you got to get real estate license to do that. I think getting licensed is about what are the legal parts of it? What are the rules, right? And then there's some basics understanding of maybe how the product works on a base level.
Yeah.
Now investments, I think, are a little different. There's different licensees that do teach different things, but I can remember when I went and got my Series 7 that license, that was all interesting, but it didn't really, now that I've got 9 other financial designations beyond the licensing, that's what really gave me the ability to specialize and really learn. And then obviously working with people, right? And having situations where I had to think about strategy and do research and understand what I was doing. And that's why I kept getting different designations, is because I was like, oh, I want to specialize in divorce. I want to specialize in special needs. I want to understand that part of the business a little bit more thoroughly so that I can help somebody if they come in with those specific issues. And so the licensing is kind of the beginning, but I would tell you that if you're working with an advisor that only has their licensing and that it doesn't have anything else in terms of, the CFP or any of the other stuff, I would hope that they'd be part of a team where there is somebody that maybe has those higher level credentials there, so that you can be assured, that you're getting that extra level of expertise, as you mentioned.
Got it. Awesome. Well, anything else you would like to add?
I think that, if you're a consumer out there watching, I think that you have to be your own best advocate. I tell my kids this all the time. You have to ask great questions. Anybody who makes you feel like a question is dumb or not, worthwhile asking, run. Mm-hmm. Run as fast as you can away from them. I think you got to ask questions. You need to understand what's going on so that when you go out and you do hear something online or you do hear something from your friends or your family, that you'll be able to reason through why that may or may not be a good thing for you. Mm-hmm. And so I think you've got to do your own, be your own best advocate, do your own education, work with advisors that have some of those expertise so that you don't get yourself in a situation where they're only in the business for 3 months and then they're out. Somebody who's got that tenure, I think, is helpful, or that's part of a team that has a tenure. Because, I train a lot of new people and I tell them, team up with other people that have the experience so that when you go out and talk to people, they know that, you've got backup, right? Mm-hmm. you're not expected to know everything if you're brand new into that business. And so I think that would be what I would tell consumers. And for advisors out there, don't stop learning. If you aren't growing, you're dying essentially, right? You're getting further and further behind. Our world's moving at a rapid rate. We need to be keeping up. And so you should be reading things, consuming things, being a part of whether it be education or following different people and, immersing yourself in what it is you do so that you can be in the best position to help people.
Yeah, I've actually found that networking was one of the hidden gems and life hacks for my business is, yeah, I can read as much as I want, but if I can put myself in the same room with people that have been there, done that at levels much higher than me, networking has exploded my personal career and in business as well. Getting into trusts and funds and secondary markets, my head exploded. I was like, I didn't even realize this existed. I assumed it did because you see, companies like BlackRock, KKR, Vanguard, State Street, throwing out trillions of dollars. I'm like, okay, it must exist, but I didn't understand the world. So I needed to put myself in that room and I needed to get myself outside of a comfort zone to have those conversations and network and also humble myself, be like, listen, I want to have this conversation with you, but I want to perhaps I don't know anything about what you're talking about. So talk to me as I'm a seventh grader. And I was actually shocked at how many people were like, that's all right, man. That's cool. Just being that transparent. It was like they almost wanted to give more because you were willing to be vulnerable. So anyways, I would add that networking is a life hack that most people are just scared to get out there and have conversations with people.
Yeah. And, they say if you're the smartest person in the room, you're in the wrong room. I think being around people that can elevate you and that you can learn from is always a great thing. It's been very important for me to have that in my career.
I'm in my office and I'm still not even the smartest person in this room. My videographer, Derek, is over there cutting the camera.
I don't know about that.
All right. Well, cool. Well, Ande, I greatly appreciate it. Again, I got the book here, Ande Frazier, Financially Free. I soon pick it up on Amazon.
Amazon, any major bookseller you can pick it up.
Awesome. Well, thanks for taking the time out of your day to talk with us today and looking forward to the future.
Yeah, absolutely. Thanks.
Take care. Bye-bye.